Will Ethereum continue its upward trend? What is a key resistance level that you need to be aware of and a particular price ratio? And today I'm going to show you why, what's likely to happen next. So if you like today's video, like, subscribe, hit the bell notification. Let's dive straight into Ethereum. So when we're looking at Ethereum, keep in mind markets tend to move in 5s and 3s. Not always, but more often than not. And this time it looks like we've had this nice 1, 2, 3, 4, 5. This is from back in June. The nice movement to the upside, and we've had this corrective structure. It looks like a 5-wave corrective structure, but the bottom is not confirmed, even though we are at a key Fibonacci ratio. So what we're going to look at is this zone over here. There's a particular behavior that buying and selling behavior just tends to play out. Fear and greed playing out time and time again. And this is, you just want to be very aware of this. Now, I'm currently long on Ethereum, so I'll be managing my position, looking to become a risk-free or lock in some profits at this price zone. So we're going to cover that in a bit more depth. Now, this particular chart, I've got all the analysis on here. You can actually now download this for free or upload it, view it for free. It's in the link below. You'll get all my charts, one of which is Ethereum. So, and you can upload it and then edit it as you see fit. So what we're going to do now is I just want to go into a bit of depth over here. There's really two main factors. We're going to look at, I guess it's 3 factors, right? 3 factors. Because there's always 4 things you want to pay attention to, but 3 of them are really, really clear right now. So let me just zoom in a bit more over here so we can really pay attention to the immediate price action. So firstly, I love using momentum. So the weekly momentum is actually pointing down. So we're taking this short-term long trade against the macro trend because we're trading on the daily and the hourly, me in particular. But what we can see is these lows, in terms of where the blue line goes above the red, tend to marry up quite nicely over here. But the tops is also the same. What I mean by that is if you look at this blue line going below the red, it married up nicely with this one over here. So over the next 1, 2, maybe 3 days, we're going to be on high alert that the momentum is something called overbought. We're probably going to see a top. So we're going to just ideally become risk-free by that phase if the market moves in our direction. The second thing we're going to look at is pattern position. Now, what I would like to see happen in terms of making money from the markets is this initial move up. We got some type of correction. I would like to see a continuation, a wave 3, and then some type of pullback, and then a wave 5, like so. That would be my ideal. However, the weekly momentum is pointing down, and the daily momentum is looking like it's going to become overbought, which indicates a local high is going to be likely over the next coming few days. So we don't want to ignore that information, because one of the difficulties when it comes to trading and making money from the markets is cognitive dissonance. In other words, you're seeing what you want to see based on your behavior. In terms of if we're long on Ethereum, this is what we want to happen. But we have to tie in, there's a paradox called doublethink, where we need to go, okay, this is what we want to happen, and we want to be in the market if it happens. But if it doesn't happen, what is the minimum that should happen if the price is to do this, in terms of hit this kind of ratio and reverse? And we want to be on high alert with this position. This is where risk management, capital preservation comes in, and everything else. There's a great quote. I'm going to read it now. Read it again at the end from my book. It's in chapter 2. But I start the chapter with a quote, and it's from Warren Buffett. And he says, rule number 1, never lose money. And rule number 2, never forget rule number 1. And I'm going to show you a practical way of now applying that. Now, we can never not lose money, as in it's inevitable, but we can reduce the chances of it happening. And by the way, if you want a copy of my book, you can now get it for free as well. It's in the description link below. There's some amazing value in the book. I wrote it in 2017, but it's really around mindset and getting your mindset around investing really, really, really sharp. So I want to get this concept across, because I think people find it difficult to understand this. So this is what I want to happen, right? A wave 1, a wave 2. I would love a nice impulsive wave 3. We'll make a lot of money from the markets. A wave 4, and then some type of wave 5 and a continuation, right, before any kind of correction. That would be my favorite, right? But it doesn't mean it's going to happen, because the weekly momentum's down, the daily momentum's becoming overbought in the next couple of days. So what's the other alternative that might occur? Well, there's many alternatives, but the main high probability one is this one here. It's called an A, B, C correction. Let me just change the color so you can see it. Now, if you want to get great at trading, you have to be comfortable knowing, I'll leave it like this, that there's two outcomes. And we don't know which one, and we don't need to know which one. The key is to know that you don't know, right? Make sense? The key is to know that you don't know, because when you think you know, then you don't. But when you know that you don't know, then you do. You go, what? Do you care? That's just like riddles. All right. We want to be in the market and going long. And we go, right, the minimum that should occur from a probability standpoint is an ABC correction, right? And that's what I've drawn over here. These are typical ABC or end of wave C price zones. But we've got momentum, we've got pattern. So if this occurs, we'll probably look to short the market because there might be a few different things. So what to do? What to do? So I want to draw this out because I want to draw it like this, actually. Let me do it like this. So let me just change the color over here. So let's just say today's bar just does really well for us. And let's just say it closes up here. And then tomorrow the bar opens, goes a bit lower, and then goes higher, and then goes here. And then and let's just say this is where the price is at. Let's just say. And so I want to play this out for you. And let's just say the momentum, the red goes into this zone over here, and the blue goes into the zone over here. And let's just say we get a reversal like this. Okay, well, we've hit the price zone that we just spoke about. We've got a bearish reversal, probably going to come in the next couple of days. And it looks like an ABC structure. We don't want to ignore this information. So what we do is go to a lower time frame. And so let's just say you've got, oh no, let's just keep it simple. Let's just say you got $2,000 position, right? Let's say it's 2,000. How to manage your risk is you take half of that, which is 1,000, whatever that means for you, because you could be out buying the underlying asset, could be trading futures, could be CFDs, and you tighten your stop loss on half of the position, like really tight on a lower degree time frame, where you want to get stopped out and lock in some early profits. And let's just say you went long over here. Hopefully this is making sense. I'm talking trading term. Let's just say you had a reason to go long over here, and that's roughly where we went long, I think it was. What you want to do with your second half of your position is move your stop loss from, let's just say it was down here, to break even. So what you'll do is you're saying to the market, I want you to continue to the upside. However, I know you've met a minimum criteria of an ABC structure. The momentum is overbought and bearish if it unfolds like this in the next couple of days. We've got key Fibonacci price zones. So if you reverse, I make money. Not a lot of money, but you make some good money. 1%, 2%, could be 0.5% of your entire account size. However, what you're also saying is, if the price continues to the upside, I'm going to make a lot of money. And then I'm going to manage my stop loss that way as well. Hopefully that makes sense. And by the way, I've got a masterclass. It's how to become a student of mine. It's 4 secrets. It's free. And it teaches you what I just taught you here in terms of momentum. We're talking about double time frame momentum. We're talking about pattern position, the psychology of buying and selling. And I've got some fantastic courses that teaches you how to do this yourself. So if you want to join my private community, my private Telegram, my weekend workshops, we're giving a lot of value away. This is the gateway. Check it out. Get some amazing value. But what I'm showing you here is what I cover. So what would confirm, and this is what we're going to finish on. If I bring up the drawings again, let's just get rid of these lines over here. What will confirm this low, that this is likely to hold? Well, it's really if the price goes above this high. If the price breaks this high with a bit of confidence, so we do get a follow through, some type of wave forward, and then a follow through, and we break and close above here, I go, that is a lot of confidence. Now, if I see a 5-wave structure like this, or 1, 2, 3, 4, 5 up here, I will be looking to exit the full position as close to the wave 5 as I can get, because what typically happens is some type of correction and then a continuation again. And that's what we mean by 5s and 3s. 5s and 3s, and you'll see that just unfolding time and time again. So if you like today's video, like, subscribe, hit the bell notification. With Ethereum, be on high alert of $1,400 to $1,500 price range, because that's a typical ABC correction zone. It doesn't mean it's not going to break. If it breaks that with confidence, then we have a higher probability that we're going to get the follow through. So I'm actually long on Ethereum. Me and my communities are long on Ethereum, but I'm on high alert. I've already adjusted my stop losses, reducing my risk from 2% to 0.88%. And I would like to see some follow through today. If we get follow through, I'll move the stop loss to break even, which means if we do get that reversal, worst case scenario, we break even, which now leads me nicely to repeat the quote, which is, the repetition being the mother of all skill, some say. It's Warren Buffett. It says, rule number 1, never lose money. Rule number 2, never forget rule number 1. Today, we went over a practical way of doing that, to have this thing called double think paradox. Because again, I've taught a lot of traders, right? A lot of traders, and at the beginner level, people find it, especially if you're successful in life, people find it incredibly difficult to be wrong, right? And it's not about being right or wrong. Even I read your comments, and sometimes it's like you're right, you're wrong, or we're right more often than not. But it's not about being right or wrong. It's about making money, right? That's why we trade in the markets, right? We can enjoy the process, we can get into the flow and in the zone of trading, but ultimately we're here to make money. But we don't know what the market's going to do, and it's important that you know that we don't know, right? I don't know. But we can stack the odds in our favor. We got momentum, we got pattern, we got price, we got time. They're the 4 key things that you really, really want to be paying attention to. And when the odds stack up, you take the trade, and then you manage the trade as if it's not going to do what you ideally want it to do, which means when it does reverse, and there'll be times it does reverse, you either take a small loss, you break even, or you make a small profit. And if it does unfold, you make a nice profit, a very healthy profit, and you can compound and really ride a trend until its end. So Ethereum, let's be on high alert over the next few days, and we'll keep a close eye on it.